All right, I'm Jed Wonderly with Noble Home Loans, and I'm back with the fifth part of the top 5 things you need to know when investing in real estate. And this part has to deal with the strategy and timing of real estate investing. And I call it the stock/bond strategy of investing in real estate. Now, as you may have heard in my one of my other videos that I did, one of the top 5 videos that I did, I worked for Fidelity Investments as a Series 7 licensed representative for 2.5 years or so. Now, when I also watched my father chart stocks and invest in a lot of stocks and whatnot growing up. So I have a fairly strong investing background, and I invest in stocks and mutual funds myself. And so basically, when I'm talking about this stock bond strategy of real estate investing, what I'm referring to is there's a rule of thumb when it comes to investing in stocks and bonds that says you should invest your age, the percentage that is your age, into equities, or into bonds actually. So, and the way that works is that let's say that you're 25 years old. Then the rule of thumb, and I don't necessarily agree with it 100%, is that if you're 25, you should have 25% of your portfolio invested in bonds and the rest invested in stocks or stock mutual funds, something that's going to provide you with a lot more asset appreciation than bonds typically do. Now, my dad is in his 80s. He's 85 right now as of this video, and he still has probably 80% of his portfolio in stocks or stock mutual funds. Mostly mutual funds, just because he's trying to, simplify his life and not have to track stocks on a regular basis. Now, as let's say you're 25, you have 25% of your money invested in income type assets, which are bonds or bond mutual funds. Then at 40, you're going to have 40% of your assets invested in bond mutual funds. When you're 60, you're going to have 60% invested in bonds or bond mutual funds. Now, what that does is that basically says, okay, first of all, income type assets are less volatile price-wise. So in a big downturn, you're not likely to lose near as much of your assets as if you had it all invested into stocks. Of course, the other side of that is in all the years when there's great gains to be had, you're not going to have nearly as much assets to appreciate as you would have if you had a lot more invested into stocks. I personally don't have any money invested in bonds or bond mutual funds right now. I'm in a wealth creation phase of my life, even though I'm 51, and until I get really close to retiring, I will not have money in income investing assets. That's just me. That's how my risk tolerance is. You may be completely different, and that's fine. But when the idea is that as you get closer and closer to retiring, you're shifting assets from assets that are going to be have the potential to appreciate more to assets that are going to have the potential to provide more income. And the reason for that is that obviously when you do retire, you're going to need to replace your income from your job with some other source, and that's typically going to be something that's going to pay dividends on a regular basis, which would be bonds or bond mutual funds. Well, on the real estate side of things, the way I look at it is the type of real estate that's going to provide you with the most appreciation is going to be a single family home in a great area of town. Now, when I counsel people on the type of home they should buy, I say, first of all, would you live in it? And to me, if you're not gonna, if that home isn't, regardless of size, now obviously sometimes people can't live in it because, hey, their family is, you know, a little bit bigger than what that investment property that they're going to buy would accommodate. But that aside, you want to buy a home that would be nice enough that if you were in the right phase of your life, that you would certainly live in it. So you want it to be in a good area of town that's close to, you know, employment, close to shopping, and close to good schools. That's what I always tell my clients. And so when you're in the asset appreciation phase of your wealth creation / preparation for retirement, you want to make sure that you're buying assets that are going to give you the greatest chance of appreciation, which are single-family homes, because there's a bigger market for single-family homes than there are for condos, townhomes, or duplexes and fourplexes. So that's going to give you the most appreciation. And so you want to buy those types of assets. Those are the stocks of real estate. Then, you know, as I said in previous videos, you want to re-leverage every 5 to 7 years typically. And, you know, we can do some math on some spreadsheets that I've developed that helps you with deciding where your sweet spot is. So you sell those. So every 5 to 7 years you sell that and you buy 2 more maybe. So if you had if you got $110,000 out of a sale, or even $100,000, whatever, you know, you've sold your $250,000 house that you bought at $200,000, and now you take $100,000 that you got from net proceeds from that sale, and you buy 2 more $200,000 homes or $210,000 homes or something along those lines, and you put down 20% on each of those, and you have enough money left for closing costs, and now you've got 2 properties. So now instead of a $250,000 asset that you just sold, now maybe you have a $400,000 or $420,000 in assets, something along those lines. And you keep doing that until your asset base just grows bigger and bigger, and you know, now you have a couple of $1 million in real estate or more, and you're deferring capital gains because you're buying those properties, those new properties, in the right way using a 1031 exchange. But now, let's say you get to a point in your life where whatever that age is, you say you're going to start thinking about retiring. So maybe your goal is to retire at 60. And at 55, you're going to say, you know what, I'm going to start shifting my assets from asset appreciation assets, or the stock assets of real estate, which are the single-family homes that don't typically get as much in rental income, to income-producing real estate. So, and again, a great realtor is going to help you find properties that are going to kind of maximize your income and maybe still provide a little bit of appreciation. But some things to look at are townhomes. I try to stay away from condos. The problem with condos is that oftentimes the association fee, and can also be true with some single-family residences depending on where you live, and it can also definitely be true with some townhomes. But condos definitely, for the most part, especially newer condos, have association fees that can really kind of eat in to your overall profitability, and just not be as good as a townhome or a duplex. And if you really want great income for your dollar invested, fourplexes are also good. The problem is that when you're buying fourplexes, and in some cases duplexes, they may not be in a great area of town. Now, for me, there's some duplexes very, very close to my neighborhood, and so they're in a great area of town, and in fact, I have to drive by them. Either way I enter my neighborhood, I have to drive by them to get to my house. So, you know, a duplex would be a great thing that could also possibly provide a decent amount of appreciation, but certainly help maximize your income, so that as you start selling off, your single-family properties, and you might want to keep a couple of them just for diversification, because diversification is another thing that I haven't really talked about a whole lot that is, to me, key in asset protection, in terms of being able to make sure that, well, even if the value falls, like you have a soft real estate market and values drop, you're at least going to still have a better chance for recovery, for one, or maybe the income, like in the case of a duplex, will be good enough to not have to worry about how much the asset price is going to fall. And probably not going to fall as much on a duplex as it will on a single family residence, but you know, it's important that you do diversify both within the real estate in terms of the property types that you have, especially as you get closer to retirement, but also I've talked about making sure that you have other kinds of investments. In terms of, there's great life insurance investments, and I can get you in touch with financial advisors who can help you with those. Also very tax advantaged investments. I recommend Roth IRAs, so that you, when you're pulling money out of those accounts when you're retired, that you don't have income tax to pay, things like that. So those are all great. So you might want to keep some single families, but you know, if you have a portfolio of single family residents and you're starting to sell some off and convert them to better income producing assets like a townhome or a duplex or even a fourplex, then you know you're going to do that over time, because you didn't buy all of your single family residences at the same time. But it's going to be a process that you're going to do, and it's going to be something that ultimately you're going to be able to have some great assets that are going to provide you with a great income, even if you have mortgages on some of these, because you know, you might be able to increase your asset holdings, because you can still 1031 exchange out of the, let's say you have $2 million in holdings that you have, maybe you cleared, you know, 800,000 on. Well, now you're going to be able to take that money and maybe buy, you know, 2.5 million or something like that in real estate. But you're going to be able to get more income per dollar invested, because you're buying things like, you know, the duplexes and such. So that is the stock and bond strategy of real estate investing. And if you have any questions, please feel free to reach out to me. You can get me on my Vegas number, my Southern Nevada phone number, 702-812-1214, or on my Salt Lake number, which is 801-893-1737. I look forward to talking to you, and look for me in some other videos that we'll have on a variety of topics, and you know, that talks about mortgages, real estate, as well as other financial considerations that that don't have anything to do with mortgages or real estate. Take care and have a great day.